Hey guys, I am dedicating this channel to serve as an example that shows that you can succeed in trading with a no-brainer, easy strategy that a 5-year-old kid could do. I will prove that you can be consistent and effective with the right approach and preparation. I have a main job that starts at 11 o'clock, so I'm trading on the side before work. No indicators, no magic, no big analysis needed, and it takes around 1 minute per day to execute. I will guide you on the road from the very first steps till the live trading. So let's get started. First of all, we need to determine the strategy rules. Honestly, I don't have so much time for trading because I have a main job, so I need something that I can execute every trading day before 11 a.m. I'm living in Europe, GMT plus 1 time zone, so if I talk about time, that's what I mean. Simply convert it to your time zone and you will get it. We are going to trade the USD Japan Yen on the 5-minute time frame. So the strategy will be based on the Asian session and the London session overlap movement. To easily determine this overlap, you can go to indicators and write sessions. I like to use this one with a name of sessions on chart from Aurochs. Apply to the chart and then click to settings here. Click off the New York session and there you go. It's not necessary but helps a lot. As you can see, this is our section that we will using as our analysis for the trades. If this overlap is going downwards, I will open a short position. If the overlap is going upwards, I will open a long position. 1 trade per day, open and forget, that's it. You don't need more. I know a lot of people thinking, if you open more trades you will get more money. In some cases maybe. But it also means that you can end up losing more money too. People have to understand this. This game is not about using 10 different strategy and enter 100 trades per day. With my approach you can easily play with the position sizes that you are willing to lose. You always have to think like this. Every time you open a position there is a chance that you will lose that money. And of course there is a chance you will win some. And everybody will lose. I will lose with this strategy too, but that's okay, it's calculated. That's why we need to win more than what we lose. That's called risk-reward ratio. In this strategy, I will go with 1 to 2. Risking 1% to win 2%. Okay, now we have to make a rule for our stop loss. It will be the highest point of the overlap if we sell, and the lowest point of the overlap if we buy. If it's the same level, or almost the same, and there is no obvious difference, then we don't open a trade for the day. Okay, the take profit level is easy. Since we are going with 1 to 2 risk reward, our take profit will be twice the stop loss. If our targets are not hit at the end of the London session, we will close it anyway, no matter where it is. That's it, we got our strategy. I will show you a couple examples for buy and sell trades to have a clear understanding what method I will be trading this channel. And yes, I will only using this, nothing more. So the overlap starts here and goes up to there. We draw our line and we got a direction upwards, so we will buy. We open our buy position here, set our stop loss at the lowest point of the overlap. Take profit is twice the size of the stop loss level right here. And this one was a win. But let's see more examples. So overlap start is here, and the end is there, so we draw our line. We got the signal for a sell position, so we open it here. Stop loss comes here, at the highest point of the overlap, and take profit level will be right there. It's a win. Okay, next day. So we draw the line as you already know, we got a signal for a buy position, we open it and place our stop loss here to the lowest point of the overlap. Take profit twice as the stop loss comes right there. And this one is a loss. I think you get the strategy already, so we can move on to the next chapter. I think this is the most important thing. Without this, your strategy is nothing. This is the backtesting part. You have to know your strategy results. You have to know the expected profit at the end of the month. You have to know the max drawdown of your strategy to determine your position sizes. If you are likely to have 15 losses in a row, you can't risking 5% per trade. You have to know your numbers. I know it's boring, but this is the price you have to pay in order to know if your strategy is worth trying or not. If your backtesting brings negative results, it's also a good thing. You can move on to the next strategy without wasting your hard-earned money on a losing one. I will backtest this strategy and show you the process and the end result, what I got out from it, in the next video.